We've heard Mohammed Yunus, for instance, come out and criticize the fact that SKS Microfinance has decided to tap the capital markets. Do you think this is fair criticism?
I think the debate is not really about whether to go public or not. The debate is much more of what kind of message it sends for a sector as a whole in India. We know that there are really heated arguments for should it be for-profit, should it tap capital markets, or should it remain in the hand of the NGOs. I personally think there is nothing wrong with going to the capital markets and doing business with the poor. The question rather here is what will happen to the Indian microfinance sector as a whole. Is it justified that SKS goes public? What will happen to the rest of the enterprises if SKS serves as a benchmark? Now, I can also substantiate this. I can also substantiate these arguments with the fact that there are two concerns. One is the short-term versus the long-term view of MFIs. Should you concentrate on the short-term profits, or should you go rather in search to customer value? I'm not personally convinced that currently in India the right debate is in focus. It is not about bashing SKS. It is not about whether to go public or not. It is about what kind of governance standards accompany this. What kind of systems and processes are supporting these public issue.
Okay, let me take that question and that issue and put that to Deval. Deval, what is your main concern at this point in time? Because, you know, when we speak with people who are in the business of development or looking after social enterprises, a key concern for them is that you cannot, you know, depend on checkbook charity. You cannot depend on the generosity of a rich corporate, for instance. And if you need to scale up, and you need to scale up significantly, you need funds. And then what's wrong with the social enterprise also developing a self-sustainable business model?
I think, once again, it's less about self-sustainability in this case, but more about actually ensuring that you're offering value services to the poor at the best price possible. And I think the issue that arises is many microfinance institutions in India and globally charge interest rates of 24 to 36%, claiming that this is needed to deliver their business, when you also have other microfinance institutions such as Basics or Mandeshi who provide additional services with the profits they generate in order to upskill and upscale the women that they're giving loans to, thereby creating stronger entrepreneurs in the community and reinvesting whatever profits they've made to actually take women out of poverty faster. And I guess this should be really the principle of investors in microfinance or social businesses for that matter, when they're looking less at social sort of benefits that they're going to get back, but more the returns that these women and the customers of these products will get at the cheapest rate possible.
Deval, just a question about where the confusion really lies. It's a question of motive, particularly when it comes to the promoter and what his motive is, and an investor and what his motive is. Isn't there a conflict of interest when a company like SKS goes public, realizes there is a valuation gain that is there which investors are looking to cash in on, as against your own intended objective of setting up the microfinance in the first place? Isn't there a conflict?
Well, I guess, again, the conflict arises with, and this question should be asked probably more to the investors and the promoter. And at least all the press that I've seen in the discussions have happened have not included either Vikramakula, Sequoia Capital, Kismet Capital, or the various other individuals who actually took a risk 10 years ago to support this initiative. Instead, I think there's a lot of us who think that this is right or wrong. But I think it's maybe to ask this question to the investors and see if they feel that they were falsely led in financing this organization, or did they actually feel that the risk capital they put in was worth this risk? And I think another question is, will this capital go back to their pockets or to fund other social initiatives going forward?
Okay, Anna, let me come to you, because you were talking about how this could actually set a precedent for the mutual fund industry in India in the future. Now, you know, there's often been a lot of debate on the lack of a stringent regulatory framework as far as MFIs are concerned. I know that you believe that they shouldn't be compared to banks in that sense. In fact, you feel that the regulations for MFIs perhaps should be stronger than banks as far as MFIs are concerned. Take me through what you actually see or what you would like to see as far as the road ahead is concerned, given the fact that we've now got these changing market dynamics.
Yes, first of all, I think it's very important to remember that microfinance provides services to a very vulnerable segment of the society. So if you make a mistake in a bank or any large company, the worst case can happen that the company writes off its loss. But if you make a mistake in microfinance, you actually deny from the vulnerable segment, from the poor, the services that you intend to develop. So that's not a mistake. In my view, that's straight a sin. To me, the reason why MFIs should be even more cautious with their standards than banks, because banks have proven so far that they are unable to cater to this segment. So if MFIs wants to come to the fore and say that we will architect a new set of standards how to extend financial services at the base of the pyramid, they cannot neglect systems and processes, they cannot neglect transparency, they cannot neglect the real meaning of an interest rate, for example. I can guarantee that 80% of the MFIs in India do not know what is the real interest rate that they charge. They simply don't. They never make these calculations.
Right.
They never calculate whether they have an additional fee, whether they charge insurance fee, whether they have voluntary savings accounts, and so on and so forth. But these are very fundamental and technical issues. I think the larger question is not that much of the motive of microfinance. It's the way to execute it. Just because there is a huge unserved massive number of people in India, that doesn't justify that microfinance is very successful in what it is doing so far. It only justifies that it managed to serve a need which exists and that there is a huge scope for expansion. It doesn't justify anything about the impact. It just doesn't foretell anything about what the future of microfinance should be. So the reason why I'm a little bit concerned and cautious is because we do need to think what will happen 5 years from now. How many of those loan customers are actually going to come back and take new loans?
Right, fair point.
How many of those loan customers are going to switch into the formal economy, for example?
Fair point. They will come in on this. Questions of governance, questions of transparency, questions of 5 years from now, what happens to those customers who you're lending 10,000, 15,000 rupees to? Are you doing anything about moving up the value chain and, in a sense, delivering that social impact that you actually intended to do in the first place?
No, and I think this is, again, the issue. I think when banks lend to microfinance institutions to on-lend, they're more concerned about their 15, 16, 17% interest rate as opposed to the social impact that these organizations are creating. And a lot of this is just a function of the philanthropic markets right now, where you actually don't have access to philanthropic funding to scale these organizations. I mean, these banks or MFIs follow very much the same rules as a normal NBFC would follow. Therefore, they need equity to be brought in to not just form the NBFC, but they have very strict regulations according to external commercial borrowing, which does not allow them to borrow at much cheaper rates at 2 to 3% interest from abroad, but instead, because of the bank lobbies we have in this country, they're required to borrow at the high rates and then on lend at much higher rates. So I think the issue is really to look at the laws and see that if we are going to give subsidies or special sort of circumstances for these organizations that are dealing with the poor, then I think it is safe to assume that various measures need to be taken into account, such as limiting the interest rates or limiting the profits that an organization can take out post sort of IPO or exit.
Right.
That being said, again, the rules are such that I know for a number of years many microfinance institutions were getting loans at a very low rate, but the banking sector in India didn't allow those loans to come in. Instead, we're charging, again, very high interest rates, which is not fair to the women that were being helped. Yet the Indian banks are quite excited because they were able to fall under priority lending and meet that mandate and still get their money guaranteed.